Well, let's welcome our next guest. We have Jigar Mistry, the co-founder of Buoyant Capital, who joins us on the show. Hi, Jigar. Good afternoon. And it's been a long while since we spoke, I think. So good to have you on the show, Jigar. Saturday morning. How are you feeling
Likewise,
about the
Nigel.
markets? And how have you all rejigged your portfolio? If you could give us a couple of themes, say in the last couple of months or so, or what's looking interesting for you from here on?
Good afternoon, Nigel. Wonderful Saturday evening. It's talking after a while on a Saturday for sure.
Yeah.
Yes, so I think, nine trading days to go from now to the opinion polls. And I think increasingly it is likely to get a lot more choppier. One thing that is, looking very, very ominous, so to speak, is that if you look at all the sort of political announcements and the commentary that's going around, then you saw, the finance minister come and say about how sort of the liquidity is marring the markets. Now you go back and track it back to, all the events that has followed this. So first, all the unsecured lending going into three large places, NBFCs, the risk weights were increased, online gaming, the GST was introduced. Something I think needs to happen in this sort of huge FNO market that we are now seeing. You can be 80% of the world with the overall value where we are. So I think post elections, you might have to get prepared for something around that. The micro cap NSE 250 or below 500 numbers, the wealth, as we discussed last time, has gone up from something like 5 lakh crore to 32 lakh crore over the past 4 years. And all that money is being channeled up to, the small cap funds whose folio numbers have gone up 4x in the past 3 years. And a lot of money is getting into the lower free float businesses. 70 PE stocks are becoming 90 PE stocks. So I think the way in which we are getting prepared is that, yes, some businesses might get a pop if BJP continues to get a reasonably large majority. But I think we need to get a lot more prepared for what comes after. And that is where I think, as we discussed, we have slowly over the past 3 or 4 months have been reducing our exposure to small and mid caps. We were almost 65% small caps in March 23. Like everybody else, we have also had a reasonably decent run. But increasingly, I think we are bracing for impact, so to speak.
Bracing for impact, Jigar. Wow, that's really making us sit at the edge of our seats. But I mean, why do you feel so? Bracing for impact in case the electoral outcome is not what the market had in mind, or do you see any other reasons why we
No,
could be running
despite
into rough weather?
Despite that, Zurbi, let's assume that FIIs are clearly short. I think I don't remember the exact numbers, but I haven't seen a bigger number of an FII net short position getting into an electoral result. Now, the base case, like everybody else, is that BJP won 224 seats with a higher than 50% vote share. And in a first past the post system, you can assume, the incumbent, once you cross 50%, it doesn't matter. There were 39 other seats which they could have flipped with a 5% change in vote. So with everything that's gone on, the base case has to be that BJP continues to get a third term. And, this whole 400, 350 or 300, the only number that matters is 272. So as long as they get it, which we think should be a reasonably decent probability of that happening, then that's sort of a done deal. But I think a large part of that, I would argue, is being priced in, right? So many businesses that are reporting just huge order flow increases are just trading order flow to order flow rather than whether markets are waiting to see if that order flow results into actual execution and profitability. So if that is happening, that's a low probability fat tail event that BJP doesn't get a majority. But I'm talking despite of them getting a majority, in which case initially there will be a pop because either ways the FI shorts have to get unwound. But what comes after is something that we are predicated on in that, you cannot have a kind of bubble being built up, which then risks the entire stability. And if you look at the narrative that has been building, and that's how I think governments operate, right? You have the SEBI chief come in and tell you that, the liquidity event could be a big one. Then the finance minister come in and tell you that this is sort of getting a little bit out of hand. Then they might tackle it through some legislation, which obviously will be misinterpreted when announced. And then that can lead to a reasonably large unwound. And if you are approaching this from a very low valuation liquidity standpoint, then it's easier to handle the aftermath rather than sort of how things appear at the moment, certainly.
Got it. So you're looking beyond the pop, which may happen if we get the expected result, because a lot of shorts cover and we're net short going into the market, and FIs have not bought in cash at all. So I guess you're looking beyond the pop-up that might happen as an immediate knee-jerk reaction. I know Nigel's been talking about this for a long, long time now. The level of net shorts in the market, Nigel, they still remain at very elevated levels?
Yeah, that's right. As Jigar mentioned, that the shorts are at extremely high numbers. And he also added that getting into an election result, he's not seen something like this. So just a couple of points that I would like to make. The net short positions right now is around 2.5 lakh contracts. So the number looks very, very large. Just one point out there, you need to half that contract because there's been a change in the lot size. So effectively, a 2.5 lakh contract net short position is more like 1.25 lakh contracts, which is which is still net short.
Still high.
But in the last 1 year, that's in the last, maybe April, so I'll take it last 13 months, I've also seen the FI net short at 175,000 and 196,000 as well. That's in the last 12 months or so. So we're net short, aggressively net short, one of the highest we've seen in the recent past. But as I keep making this point, you see the FI's net short at around 100,000 odd. That's the time to go long. And that's worked out for the last 4-5 times that we've seen 100,000 net short contracts. So we are net short. We're not at optimal levels, but getting into a big event, if you get some kind of good news, well, the markets will go up. Maybe not because of the cash market buying, because the shorts will run for cover.
And that's what's happened in the last, at least, last several months that I can remember. The FIs have been on the wrong side. The shorts have been caught on the wrong side, and then they're forced to cover, and then we get that big up move. But I guess Jigar's point is that even beyond that up move, then what? Because then we run into budget, then we run into real policy, and I guess that's where his concern is stemming from.
Maybe in the coming days I'll put out this piece. I think that the markets could go up because the FIs are so underweight on the Indian markets, and we haven't seen this sort of FI underweight on Indian markets in a long while. I think it's around 17% or so. We'll try to get some data on that front. But Jigar, let's get back to talking about stocks. We earlier chatted maybe around 10-12 years ago because of metals, because of cement, the old economy. So I wanted to ask you ways of playing these themes now. Some of these stocks are going berserk. Valuations are secondary. It's momentum. So how do you approach these themes? If you could tell us fairest, non-fairest. And also I wanted to ask you about this gold and silver theme. Hindustan Zinc is nearly doubled in the last 45 days? Yeah, 45. That's the only play that we have on silver. So how do you play the silver, gold themes? Manappuram, Muthu, they are doing well as well today.
Right, Nigel. So I think you sort of approach it from the place that eventually, if you are going to de-dollarize, however small the proportion, then every country will choose its way to reduce the exposure to dollar, because a 1 trillion balance sheet size in 2003 for Federal Reserve, going up to 9 by 2022. And if that reverses at a certain point, then Bitcoin, gold, silver, commodities, physical, land, all of that will start getting a lot more attractive towards fiat, vis-a-vis the fiat currency. And even in the sort of results that you have seen, like, for example, Hindustan Zinc, which has sort of a very low float, if you remove LIC and Vedanta and sort of the other people, then the low float businesses have done as well, but Vedanta itself hasn't done as spectacular, good, but not as spectacularly well. So all the commodities sort of, even these and, the lower end, like if you look at the manganese ore prices at the physical market level, that actually have also done fairly well. I think all these businesses sort of do make a lot of sense from a shorter term standpoint. And I think the whole thing is that eventually there's so much money flowing in that you will have to diversify into businesses that are even optically looking not all that expensive. And traditionally, these businesses have looked a lot better. Within that, I think ferrous, Moil is some businesses that we have owned for a while. Ferrous looks a little bit more manageable because non-ferrous is still an international commodity. So you might see a pop there as well, but steel, etc., does make the cut reasonably well. But if I may, Nigel, just sort of wear your hat and ask you that if you, on the point that you did mention, if you actually take the absolute amount of dollar shorts, right, not contracts, and
Yeah.
juxtapose it vis-a-vis the VIX, right, and because this net shorts at a lower number might actually not be a hedging contract. So when you juxtapose it against the heightened VIX, would it then imply that the pop could even be more severe vis-a-vis one that's created at a lower VIX level?
Yeah, I think so. I think so, Jigar. And getting into election, actually, we had put out this piece around 10 days or so ago when the VIX was going up, and we just said that that even in 2019, we did see the VIX shoot up. If I'm right, it went out from around 9 to around 28, and the markets corrected by 5%. That is, it came down by around 800 points, Jigar. I think if we have those graphics as well, we could pull it up. And then, post the election result, what we saw was the VIX came down from 28 to around 15, and the markets went up from that 11,100 to 11,900. So we made up all the losses that we saw should be in the post-election verdict as well. But good chat as always with you, Jigar. Thanks a lot for joining in. We'll take a couple of these points offline as well, and looking forward to your inputs. Good Friday, a good Saturday ahead. It's not a Friday. So. And have a good weekend. Thanks a lot for that.
Half your weekend is already done. Have a good rest of the one. Bye.
That's right. But good discussion points. Thanks for joining in. Well, let's focus on some stocks and news.